Good evening. Welcome to the daily market analysis by sectors for August 21st, 2012 by howtotradesafely.com. Please note that this analysis is done for informational purposes only, and please pause the video to read the legal disclaimer below. Today was very interesting. By 11 o'clock or so, we were looking at 4-year highs for the S&P 500, and basically the broader market had gone up. This can be seen from the charts below. At 11 a.m., we were looking at 4-year highs for the S&P. This is the S&P bar chart, 60-minute bars at that time. However, by the end of the day, US stock indexes had taken the biggest hit since August 2nd. They had dropped. What happened? Incidentally, this bit of news up here at the top at end of day down here, that's telling us that oil supplies for the week have dropped by 6 billion barrels, which is one reason why oil went up. So let us take a look at the numbers. The broader market, you can see all 4 indexes dropped for the day. The worst performing was the Dow Jones, and the best performing was the Russell 2000. This is rather strange. Normally in a bearish turn, I would expect the Russell 2000 to drop the most and the Dow Jones and the S&P to be the best performing out of the 4. But now we see that in this drop, both the Dow and the S&P dropped, whereas the Russell was the best performing. The VIX went up by 1 point or 7.13%, and light crude oil went up by 69 cents. Here is the chart of the Dow. It started to go up during the day and then it retraced. Same thing with the S&P. It started to go up, hit the 4-year high and then retraced. Same for the Nasdaq and the Russell 2000. The volatility index, you can see, is up. It's just hit just above 15 at 15.02. And over here we can see light crude oil. Again, it started low, but it went above its resistance, the 200-day moving average resistance, and dropped back down again to that resistance point. Taking a look at the sectors, we can see that almost all the sectors started to go up and then retraced. The worst performing sector was the utilities, whereas the best performing sector was finance. Technology was very interesting because Apple did a retracement, and the drop in Apple and Facebook caused the technology index to be the second worst performing index for the day. What does all this mean? This is an opinion by someone else. He says that there are several reversal signals in key indexes. What happens is that the Dow shows a key reversal day. The S&P 500 produced a bearish engulfing reversal pattern. Apple hit an all-time high, then reversed to form a dark cloud cover. This is again a bearish signal. They're all bearish signals. And what he's saying at the bottom is that this is an exhaustion in buying power, and there is going to be an impending reversal. He then goes on further to talk about this, but I happen to disagree. I feel that while the market is overbought and that there are economic problems throughout the world and a correction is clearly necessary, today the market came down on no news. There was no catalyst. And also, the worst performing sector was the defensive sector of utilities. So in my opinion, the rally has another 2 weeks or so to go before the pullback occurs. You can download this in PDF format at howtotradesafely.com. Thank you very much for there.